So here's our list of the most discounted growth stocks. Here are the first 15, most famous one, and number one, Pinduoduo, some other ones, Mercadolibre, Paycom, Lifeway Foods, Dynatrace, so on and so on. Today we're gonna have look into Mercadolibre. So first of all, what kind of criteria we looking, what kind of metrics we are looking that those companies make into our list. So here they are ranked by the price to sales ratio 1, 2, 3, 4, 5, etc. 56 in total. So first of all, we want to see good year-over-year sales. We want to see them making records in revenues, but we do not care about quarterly results. We only see year-over-year because every company has the seasonality and fluctuations, and we only look over year-over-year. So we want to see all of those companies in this list have made 100% sales increase over the last 1.5 years. So yearly, year-over-year. Then we want to see double digits in the average growth over 6 quarters, because there's a lot of fluctuations, so we want to smooth them out. All of the same goes for book value. Then we want to see some at least some profits, because the growth companies, we look more into the sales, and we care about the earnings once the companies are bigger. And then we rank them by the price to sales discount. So first of all, we take the current price to sales, divide by the average, and then we get the discount. So for example, if you look at the Mercadolibre, it is trading only 53% of its actual mean. If we talk about price to sales, so current 4.63 and the average 8.74. So let's look more into detail about Mercadolibre. So we see constant and steady growth. Nothing very scary over here. Nothing to be worried about. Maximum revenues, very strong growth, and what's also great about Mercadolibre is they have been increasing the revenues more since 2018. So their all-time compounded annual growth rate has been increasing. Here we see only positive quarter since 2020, third quarter year-over-year sales. So here it is, the all-time compounded annual growth rate 2015 was less than 40, and they have been increasing it since then, last 8 years. So usually most companies have a steady decline in all-time compounded annual growth rate, but MELI has been increasing it, which is exactly what we want to see. So we see strong book value per share growth too. So they made the record here 2023. So 5-6 quarters ago, there was a slump during COVID, if you talk about book value per share, but we see strong growth now. And what what's also great is we see only positive year-over-year. So since so they had only negative quarters until 2021 fourth quarter, and since then they have been increasing book value steadily. So not a single negative quarter last 3 years, almost 3 years. So this is the old time. Actually, this is this line, there's a bug, it's actually going even more higher. So almost 80% all time positive quarters on book value. So here are the actual numbers. So average over 1.5 years, book value 36.5%, which is a lot. So, and what makes it a good buy is the price relative to revenues. So even though MELI is quite close to all-time highs, its average price to sales ratio is 8.74, and its peak at the peak even we saw it close to 16, but so the mean has been 8.74 and now it's 4.63. So quite a lot under the mean. So 47% discount. And here's the last graph on the discount. So actually, well, the best period would have been to get it 2022 second quarter when it was trading 67% off. So this is very typical. Usually the companies, they make a peak and then there's a momentum to go to the other side. So this would have been the best opportunity, but today, first quarter 2025, it is not a bad idea, not bad time to get into MELI because it's almost half of the fair value. So the price is around 1,740. So if you go back to the mean, it will give us the price target of $3,400.